Joining us live now is the economic advisor at Judo Bank, Warren Hogan. Warren, good to see you. Thanks for your time this morning. So, in the interests of pictures, Jim Chalmers, he's drawing pictures at the moment. It's a pretty bleak-looking one on the Australian side of things, yesterday at least. It's going to be 2 years, he says, until there's going to be real wage gains. Is that your read of things?
Yeah, good morning, Peter. Thanks for having me on the show. Yeah, look, I don't think the forecasts are all that different to mine and probably most sort of mainstream economists. Wages are going to go up, but to get real wages heading back up again, you need to get inflation down, and that's what's going to take a couple of years. And I think that's a reasonable view, and I think the set of forecasts he presented us with yesterday aren't that confronting. The tone was confronting, but the forecasts are actually what I'd call a very good outcome. Now, I think it can happen. Well, the alternatives to that soft landing and getting inflation under control with interest rates only going up to around 2.5 or 3 is something much worse, either higher interest rates and higher unemployment or much weaker growth. I mean, it's actually something near a best case in my view.
So when he says there's going to be no real wage gain until mid-2024 and things will start correcting, inflation coming down next year as the system starts correcting, that's if nothing else happens, right? So if something else were to happen, then that any kind of forecast or prediction gets blown out of the water.
That's it, and it is a very fragile forecast. It's going to require a deft touch from the RBA in judging just how far and how quickly interest rates have got to go up, and of course nothing going wrong globally. The US technical recession, I don't think is a major challenge, although the US economy next year may be. But that's right, we need a lot of things going the right way. And look, the thing I'm concerned about is that it's not too lower wages, it's too higher wages. And we have got very, very low unemployment, and we have got unbelievably strong labour demand. And of course, as everyone knows, labour shortages are everywhere. So I think the real risk next year is that wages growth is higher, and that makes inflation stickier. It doesn't come down as much, and the RBA has to take rates even further in late 23 or 24.
What are your thoughts on the 7.75 inflation ceiling that's been identified so far? Is that reasonable, or could we well go beyond that?
Look, we could. We've got to see what these electricity prices do, not just directly on household bills, but also on business costs over the second half. So there's a bit of uncertainty there. But look, it's a reasonable number. It's not at the low side of other forecasters. They've given themselves some wiggle room there. Yeah. And I don't think the issue is whether it's 3.75 or 8 or 8.5. Bearing in mind it's about 9 in the US and the UK at the moment. It's about how quickly and how far it comes down. We need it to come down all the way to 3% or less. They're expecting that. But I think that's one of the key uncertainties is inflation needs to come down, and it may not come down as much as they're expecting.
So where do you believe the cash rate sits by December?
Look, I'm of the view that they don't need to rush. They're more than likely to do a big move next week. But then I think they should pause, watch how the housing market goes in the spring selling season, because, of course, that's the key impact of interest rates initially on the economy. And wait for the next inflation number in October, wait for the budget, and then finish the year probably, I'd say, with a couple more, but just 25s, cash rate at 2.5 by Christmas.
2.5. So when you say big, are you saying 50 next month or 75, just to get it out of the way?
Yeah, look, I think 75's too much. Right. 50 is a big move in Australia. You got to remember the big difference between us and the US and Canada and New Zealand is we're a variable rate mortgage market, and they're all fixed rate mortgage markets. So the RBA gets a lot of bang for their buck, and that's why I think they need to be a little bit careful. They've done a lot early. They've moved the rate probably by next week by almost 2%. But I think they need to sort of cool their heels and then just go back to the normal 25 basis point moves.
Okay. Good on you, Warren Hogan. Thank you for your time this morning. Appreciate it.